What's up, guys? I'm recording this one again because for some reason, things just don't want to work well all the time. And they did not let me know, but I still had the red light on my browser saying that it was recording, but it wasn't. So thank you guys very much for being here. And we're going to try to get through this one smoothly and about as safely as we can this time. Massive, crazy earnings week, massive, crazy PCE labor market, election results. We got a lot of stuff to dodge this week and a lot of things to be very, very cautious and careful on. So it is a very critical week as to what happens in the market. So thank you guys very much for checking in. Let's try to make a little bit of money out here this week and dodge some of these problems that are going on. So thank you very much. Please make sure you like, subscribe, and share. Do all those things, click all them buttons, and help me out on that front. And I'll try to help you guys figure out what's going on in the market. So, last time we were looking at stocks that could make us big time money, right? Not just these little 5, 6, 7% gainers, something that's actually going to start printing some funds and getting us to where we're trying to be on that portfolio, right? So we were looking at Palantir, right? That thing has already had a massive run. We were looking at Celsius Holdings. We were looking at SOFI, ASML, and Honest. Honest, we actually sold off at the beginning of the year because of a lot of management missteps and being down kind of heavy. But it's starting to look like they're getting their boat in order or whatever you want to say. And things started to look like they were being ship shape. So that one was not getting much love. I don't really blame you. I just thought it might be time to look at it to see if, hey, is it a better entry point now? Is the company actually going to start delivering on a lot of the products that they were, selling? That they have some great products, but the company was being a little bit mismanaged. So that one, again, no love. Palantir got a little bit of love, but I think ultimately it had run up a little too much. So not as much enthusiasm on the voting front for the Let It Grow Investing Challenge. If you are new here, we've been putting money into, or I've been putting money into an investment account on Webull for the past 3 years. We have around 20% of the returns, and remind you, 2022 was a kind of awful year to start investing. But yeah, now that has actually turned positive, right? We were down 15% that year. We outperformed the market, and my personal portfolios have outperformed the market for the past 3 years, for the past 1 year, and they continue to look pretty strong. So a little bit of history as to what's going on around here. ASML, we were looking at that one for the fact that they guided down on their business that wasn't related to AI. They actually reported a day early last week, and they had some hiccups in a lot of things that were non-AI related chips. So that one, a little bit of love, but the real battle this week was between Celsius Holdings and SOFI. They actually tied. So which one do I want to add? I'm going to be that tiebreaker, and I'm going to pick one versus the other. So you can actually vote on Facebook for Let It Grow Investing or the Investing, Let It Grow. There is a public and a private page. Some of the members don't want to post their different information on the public page. So it's a little bit smaller on the private group and less spam. I try to block it all, but man, having 25 other things to do, it gets a little busy about trying to just block spam from getting in the group. So if you see it, please flag it, report it. I will try to take it down. But that being said, I'm looking at these two, right? Which one do we want to take a look at? Well, I think both of them are very strong stocks. I think if we zoom out and look over the next 5 to 10 years, I think both of them can do great things. Now, which one do we want to purchase right now? Well, SOFI has had a massive run in the past, 3 months, right? 2-3 months. Let me try to get back over here to SOFI on E-Trade. I'm going to pull that up, and then I'll share my screen with you guys so you can see that. And then I'm going to try to keep looking back at my recording and make sure that we are still going. So E-Trade, I will share. SOFI, right? So we're at 1099. This thing had this big run in 2021, fell off in 2022 with the rest of the market, just kind of like what I just said. And now we are starting to see it rise back up. So we were having these problems before where we'd get above 10, fall back down, above 10, fall back down. Now we're above 10 again. Does that mean we're going to fall back down? I don't know. We have a lot of things going on this week. We have earnings this week. We have a massive run. We are also nearing the end of the year where Wall Street typically tries to, put the hurting on the little guys, if you will. They don't necessarily try to do that, but they are going to be pulling profits. This thing was down in the $6 range in August, almost in the fives. We're getting close to a double right now. And if they were buying in August when we bought this one in week 30, and I was very bullish on it then. I was also very bullish on Palantir in week 30. So we were looking at those two that week, and the Russell, the Russell 2000 index, the IWM. We were looking at that, and we decided on SOFI then as well. So they are continually adding new members. We went from 1 million now to up to 9 million. They're adding new products. They got their banking charter. All that is moving forward, and there's a lot of different things that are looking great for SOFI long term. Now, when we look at short term, this does look like it's getting to the point where we really have to outperform on the 29th, which is Tuesday. We have to have awesome earnings, awesome guidance to really sustain this price, right? I think if we don't, I think we get a sell-off. If we do, and we have a great guide, yes, we could go up to, 12, 13, maybe 14. But then what happens, right? I think Wall Street then comes back in and sells off because they were probably buying in the $6 range earlier this year. And now they have a double and they look like, heroes to their investors. So I was looking at this in week 30. I think they were too, right? I think that is probably one of the trends that's going on here. They were buying it there, trying to sell it above 10. And, if we get a strong earnings, I think that they could ultimately pull back there. If we get a little bit of a weaker guidance, they're going to say, hey, look, yeah, we got you 60% and we sold out of it. We don't want to enter that position anymore. It's not the right time. Whatever their spin on it is to their investors. So 60% gains or 100% gains, I think either way, they're going to pull out and reinvest into another place, lock those gains in, and I think we're going to be left holding the bag. So I don't necessarily think that buying SOFI this week with earnings and the election and rates and Wall Street trying to, play the end of the year, I think it is a risky strategy. I still think long-term, if you want to buy this thing, I think it's probably a good long-term play, but not necessarily the greatest entry point right now. So with that being said, I'm going to go ahead and give the tiebreaker over to Celsius Holdings. Now, Celsius, the energy drink maker, we've been looking at last week, Monster and how they have had their rise and how much of gains they have had over the past 5 or 10 years and really where that stock has gone. I think they were only second to NVIDIA on one of those charts. That might have been it. I think there was another chart where they might have been on the list, but a little bit further down. But they have definitely had, Monster has definitely had some massive gains in that time. So you don't necessarily have to be invested in technology to have those massive returns. So another reason we're looking at Celsius is the fact that it is pulled back so strong back from March when we almost hit $100 at $99.62, sitting at $31.43. Revenues continue to build up. We have more and more presence in stores, a lot more growth amongst the company, and a stock that has around 50% of upside. Limited on the downside. Yes, it's down potentially 17%. But that being said, I think we could definitely hit more of this average price or even hit back up to, the mid 50s. And I think that could be a play here for Celsius. So I would rather add to Celsius right now. We're not going to have as much election interference, rate interference. Yes, there could be some consumer demand concerns, but I don't think that we have any of those real problems that we might get out of a banking sector stock right now. Sorry, excuse me, guys. Definitely allergies and everything going around here right now. I'll try to keep it to a minimal. So that is what I'm deciding. Celsius is going to be the buy for week 44 for the Let It Grow Investing Challenge for this week, right? Now, like I said, we've got a lot of earnings coming up this week. We've got Amazon. We've got Apple, Google, Meta, Microsoft, Walmart, Target, Costco, Eli Lilly, ExxonMobil, Chevron. We've got a whole slew of bank earnings. I'm sorry, I got to take a drink here. What's left of my coffee after recording this now twice. So a lot of different things going on, a lot of different things to contend with. And I think if you're looking at the five major tech players, I think three are still buys right now. Man, this is not going well on this coughing. We've got, I believe, Google, Amazon, Microsoft can be purchased right now. You got about 20% upside on the three of them. Meta, I'm a little bit more concerned on really advertising, maybe a little bit of election interference talk. I don't know what happens if Trump says something, if that goes down, or if there's any kind of backlash after an election, if Trump doesn't get it, if he's going to point the finger at them, or what happens there. Apple, I think there's just a little bit more of a limit on how much upside they have going forward, and not as much growth out of the company right now. So that is my thought there on those. But yeah, Google, Microsoft, Amazon, I think there is a good amount of upside. And, they were all around 20% last check. So I'd feel comfortable adding to any of those three. Still, man, Costco, man, I was there the other day, and even on a Friday at like 11, just crazy busy. My cart was pushing $300. And everyone that I saw was right around the same, if not more, just buying groceries. Someone else right next to me spent $550 on groceries, and they're just, looked like another average family just out buying their Costco run for maybe the week or hopefully the month, so that definitely is going to continue to play well for Costco, and the fact that they had every lane open and there's still 40 people deep in the line ready to go. So that is definitely strong. Banks, man, the spending on banks, a lot of that is already rolled up. We've seen a lot of them already rally on some of the rate cuts. So they've got to really do some great things on earnings to impress and guide higher. We had Tesla come out and really turn things up. And they moved up about 22%. We were down to 213, and now we are sitting at, call it 270. And I actually wrote a covered call on this one on Thursday or Friday, and that is for 300. So hopefully this thing does not get over 300 by the end of the year, and I will be, getting those premiums for not selling the stock. That is my hope, and we will see what happens there as well. Enphase, they missed. They guided lower, and this thing fell off again. Man, Enphase, I thought second half of the year was looking better for them, but it is not been their year. Enphase, let's see what's going on the more of the short term here. 1 month, yeah, we're down from 110 from 140 back in June, and we hit call it, where are we, $78, kind of going back to where they were last November. So definitely painful there. I thought we were going to start seeing a second half return or rebound for Enphase. Not happening. And looks like, kind of a missed numbers and guide down from them. So that was painful. We had Viking Therapeutics, which is going to get me right to the investing challenge for week 45. Viking Therapeutics, VKTX, they are actually outlining a new drug, which is going to be their VK2735, which is a quadruple treatment, which is going to mimic a GLP-1 and GIP hormones with amylin and calcitonin hormones as well. So more on that, though, that weight loss, diabetes front. They're trying to, rival Eli Lilly's Zepbound, but Eli Lilly is also working on a triple regimen that is going to loop in a third hormone called glucagon, or GLUCAGON. And we'll see what happens there. But Viking Therapeutics is supposed to be doing human trials in 2025. So I believe that this could be a good entry point still. And man, this is, if you're looking at the chart already, if you're kind of scrolling ahead, this thing has had a massive week with the announcement of this drug and what's going on over there. I was adding to this in the low 60s. I was in around 62, 63 and adding a very sizable position for me for a speculative play. And I do believe that this thing has a lot of room to run going forward. Wall Street agrees with me. If this thing does happen and everything works out well, they're saying we can get up to around 108 and even higher, right? We can even get up to around 138. So low is really limited, right? Around 80 on the low side. So that's still about a 2.5% gain from where we are right now. We probably have some new price targets. Yeah, all these new ones are much higher, 118, 138, 125, 95. So yeah, some new price targets that are coming in, and that was all on the 24th. So this is one that I think there is still a good amount of meat on the bone to go ahead and get in on this one. And we still have these trials coming out next year. And hopefully the FDA approves what's going on over there at Viking Therapeutics, VKTX. That is going to be stock number 1 on the week for week 45. Let me just go back and make sure that we are recording. We are. Wonderful. So yeah, we've got that. Number 2, let's take a look. We were buying a Visa this time last year, and man, I still think with everything going on in the economy, more and more people are swiping those credit cards. The margins are great on this business. The spend continues to roll up. Consumer demand has not slowed down, even though we have economic problems. People are still going to be spending. So we're sitting at 281. Average price target's 317. Very limited downside. I think it can still be a safe stock to buy and sleep well at night and get some gains. And yeah, this thing, everyone says it's going to get to $1 trillion in the next couple of years. Where are we sitting right now? We're sitting at 556. Most people say by 2030, this is going to have that double and get over that $1 trillion level. So hopefully we could get a double out of this in the next 6 years. Could happen. I'm not, I don't have a crystal ball, but it could definitely happen. PE sitting at a 30. Earnings is solid. Quarterly dividend. You're not in Visa for the dividend, but there is about a 0.75% of dividend that's going to be going there. But yeah, strong margins, strong business, strong growth, and still a consumer that, still wants everything that people are selling. So Visa is going to be number 2 for week 45. Number 3, I know we're looking at Nike. We've talked before about how their business has been deteriorating, how a lot of their market share has kind of been cut. But they did just sign an agreement with the NBA and WNBA to be the exclusive provider for those leagues, right? So we could see down here, we got this agreement here. With Trefis is looking at around 15% of price upside. We've also got the stimulus in China and the amount of spend that is over there. That should be helping Nike as well in that region, that market. So more spend there. Like I said, we still have a lot of demand here in the U.S. for, athletic apparel, and the consumer demand is not stopping. PE at a 22.6. I think that's fairly valued on a trailing 12, just under 2% on that quarterly dividend, and a business that is trying to rebound, and the CEO is trying to really get things back in order over there. So they have pulled back from, that 120 last December, and hopefully we can start seeing some of this upside come and kind of do fruition sooner than later for Nike, ticker NKE, and 17% upside from the analysts as well. Pretty limited on the downside. They have had a lot of hits to them from inventory, from wokeness, from CEO management problems, and they're trying to get out of a lot of that. And I think that trying to really focus on their core business is a strong play, and really where they need to be looking to grow. And having China back on spending as well is going to be huge as well for them. Number 4, Citi. Citigroup. We're looking at you right now. Like I said, JP Morgan doesn't really look to have much upside. Goldman, Bank of America had around 11. Wells Fargo was at like 1. Citigroup still has a lot of upside. They are coming out of a lot of different problems as well, but they are hiring for their advisors. They are looking to drive that wealth advisory business. That is where they are looking to spend. They are really trying to streamline their business and where they really position their people. So I'm thinking that could be a good play going forward. And we've definitely had some different issues out of Citigroup in the past. But having a price target of around 73 on this from 61 and 3/4, I think we do have a decent amount of upside. The low is pretty limited. And yeah, it's all right. What, 3.5% dividend here? Fairly valued business, high teens on the PE, 18 times on the PE, 3.5 on that quarterly dividend. Again, we have a stock that is kind of in the crosshairs with a lot of things, rate and demand and everything else, but one that I think is trying to get out of a lot of problems in the past. So I think that this could be a decent entry point, a decent time to get into this one and have more upside than a lot of the other financials that are left to be looked at right now. Number 5, I'm looking back at Micron. I still think that Micron is a strong contender. They did, point to the fact that NAND and DRAM demand was down. That is where we came back from this 153. We pulled back, pretty significantly. We got back down here into the 80s. I started buying in the low 90s, and now we are at 107. This kind of did peak out at that 112 and pulled back a little bit. So I am trying to maybe build more of a position in the lower 100s and see where this thing goes from here. Again, more and more spend on AI, some less on the storage, but that looked like it bottomed out, and now we're going to get some more spend in the storage wars as well, right? So I'm thinking Micron going forward, being a commodity chip player, I think that they could have a decent amount of upside. They do, according to the analysts, around 38% of upside on the average. Yes, they do have some people saying that there is downside in this stock, but page 1, 4 buys, 1 hold. Page 2, 5 buys, right? So all above 135. We got a 175, a 150, 145, and a 250. So even if we end somewhere in the mid 150 range, I am very content with that. And I think it is a decent way to play chips and AI and all things internet, technology, IoT. And I think it could be a good entry point right here. So we're trying to dodge a lot of things that are political. We're trying to dodge a lot of things that are in that earnings reporting right now. We're really looking at what the future holds for the rest of the year, whether or not Wall Street is going to sell off some of these stocks that have really ran up big, SOFI, Palantir, NVIDIA, right? I still think NVIDIA is a great stock, but we might get a lot of pullback in the fact that the stock has already made so many people so much money in the past 18 to 20 months. And maybe we start seeing some of Wall Street pulling back on what goes on over there. I don't think AI is done. I still think they're going to be number one in the space for the foreseeable future. But we could definitely have a pullback. So we're trying to dodge all those things. I think these 5 names kind of get us in some spots that might be a little safe havens. I still think that oil was undervalued. OPEC's kind of being tricky. They're not really limiting their supply so much right now. We're going to have more turmoil in the Middle East. We don't know what the election's going to bring, so we don't know what that turmoil looks like going forward. So there are going to be some more hiccups there. So I don't necessarily want to roll more into those at the moment. So those are a little bit tricky. Some financials start to make sense. Utilities make sense, but they're not going to get you the growth that maybe a lot of people are looking for. So I think some of these names might give us some more upside and potentially have us in a better position to weather whatever the market throws at us going forward. Is this still good? Yeah, we are still good. Look at me. We are actually, recording something and it's staying on. So I tend to get out of camera. Just the way that my screen sharing is set up. So sorry about that. But yeah, so that is what we got this week. I'm looking at Micron here, and that is the 5. We got, again, Viking Therapeutics, Visa, Nike, Citigroup, and Micron. So thank you guys very much for stopping by. Hopefully that covers everything that I was looking at for this week that I was trying to cover earlier. And really, I think that's all I got right now. I know that we're watching the PCE, we're watching the labor market. Please make sure that you guys like, subscribe, and share. Try to boost us up in the algorithm so other people can catch on. and just see what's going on out there. I want to have everyone be aware of the different situations that we're up against. And if you are trying to start a portfolio right now, it might be a little bit tricky, right? There are a lot of different forces at play. And I just want you to understand and be aware of all those things before, maybe you get burned by adding into SOFI at maybe the wrong time. If you're looking at it in a short-term lens, I think we got to look at a lot of these as 5+ year plays. And sometimes that's tricky if you're just getting into the market. If you are just getting into the market, I do have links in the description for Webull, E-Trade, Crypto.com, and Binance. Webull, again, is where we do the investing challenge over here. We have put in $200 per week for the past almost 3 years at this point. Give it 2 more months, and we've been in for 3 years. That's kind of hard to believe, but we are posting some gains. We have outperformed the market in that portfolio, as well as my personal portfolios. So if you want to go ahead and follow along, the links are in the description for Facebook as well, where you can kind of follow along with the community. And I will try my best to post up what's going on a lot of these results from earnings this week as well. So thank you guys very much for stopping by. Hopefully that gives you a little bit of clarity as what's going on in the market and what we're up against going forward. So again, thank you. And that is it for now. I'll talk to you guys next time. Take care.